Good to have you both with us. Rohit, first, what Julia just told us, these decelerating growth in DAUs and MAUs, significant or not?
Facebook has reached very close to saturation levels. They are kind of getting close to tougher comps from engagement from COVID. So I think this was anticipated. Probably if they show same numbers in Q4, it would be a bigger of a yellow flag. But right now, I think we are giving them a pass on this. Also, as in one thing I would highlight is when they talk about the second half deceleration and the 2-year stack, if you run through the numbers, what they're essentially giving you is a guidance that is much above what Street is modeling right now. They're telling you that on a 2-year stack, we are going to have modest deceleration from Q2 levels. So Q2, you have more than 50% growth. On a 2-year stack, if you do the math versus 2019, the numbers come out to be much above what Street is doing right now. So this is a very clean beat and raise. Once Street goes through that confusing language, they will give them a pass on the user growth, but will realize that growth is really sustainable here on Facebook.
Okay, then are you sticking with your guns here on the Facebook? You have a buy, and 380 is not much above where the stock is currently trading. It sounds to me like you're about to pull something out that's a little higher than that in terms of a price target. Am I right?
What I would say is there is a lot of unmonetized surface area on Facebook that keeps growing. It is a very cheap stock. The amount of catalysts that Facebook has is probably above and beyond other mega caps that we follow. So we like Facebook. I think we would be buyers on this weakness.
Ed, how do you interpret the warnings from Facebook on second half revenues, and especially around the ad targeting, like regulatory issues, platform changes, iOS changes, and all of that? How concerned should investors be about that?
I think the platform issue is actually sort of the key issue for Facebook. I think Mark Zuckerberg, he's recently talked about what he calls the metaverse. It's a term of art that a lot of techies like to use, where you're just sort of living in sort of this other cyberspace type universe. That's really a prelude to him saying, well, we want you to buy more Oculus headsets, right? They need to own a platform, because what we're seeing on iOS, the fact that they're seeing these headwinds on the ad targeting front, I as a user, when I get that sort of message, do not allow tracking, I say don't allow tracking, and I suspect a lot of people are doing the same. So they're seeing that already, and I think it's hurting them. And it's because they don't own a platform the way that Apple or that Google does, and I think that's going to be a major factor. And I also think, if you look at sort of the saturation point, I do agree with that. I mean, they're growing their monthly active users about 7%. Last quarter is 8%. But they're delivering ads at a slightly lower clip, right? 6% more ads delivered. So they're trying to manage that little gap there. They don't want to sort of flood you with too many ads, but they're running out of room, and they're only getting the ad revenue, the bumps in ad pricing, which is nice, but they're going to run out of room there. And I'm surprised that they didn't do better on the ad front for that past quarter, 56%. I mean, if you look at what YouTube did, 84%, and a lot of it was e-commerce based. I'm surprised Facebook hasn't really taken better advantage of more direct e-commerce sales through their ad platform. So I think there's a lot to worry about.
Shepard Smith here. Thanks for watching CNBC on YouTube.